Tom Fritz here. I'm with International Futures Group as well as EFG Group, and we're going to do a recap of the USDA reports today, quarterly stocks as well as prospective plantings. Had a kind of a flip-flop in the trade today. The USDA was not very kind to the corn bulls today. Quarterly stocks come in much higher than expected. And corn acres, now remember, this is just prospective plantings, this can change, but corn acres come in higher than expected. Quarterly corn stocks come in about 140 million bushels greater than what the trade was looking for. So needless to say, we've got plenty of old crop corn to go along, at least to get us to the end of the marketing season. Looking at prospective plantings for corn acres, the trade was thinking we would see corn acres decline by about 1.8 million acres. And the decline right now, the perception is we're going to decline about 1.3 million acres. So, to make a long story short, the USDA caught the trade looking the wrong way. Why do I say the wrong way? Corn market was making new highs for the current rally just minutes before the numbers were released. So the end result was a hard break in the corn market. So what do we have to look forward to? We've got plenty of old crop corn around. As far as acres go, could be the largest acreage number of the season, but you know, we've still yet to barely get planting underway, so we're just going to have to see how the weather allows us to proceed with planting / growing season. But at this point in time, it looks like if we're going to turn this market around, it's going to take a weather play to do it, and we are minimally weeks away from that happening. Looking at the wheat numbers, quarterly stocks on wheat come in just a little bit less than anticipated, maybe 16 million bushels. Total wheat acres come in about 400,000 less than expected. The big part of the wheat acres was spring wheat acres. People were looking for an increase of roughly 300,000, and believe it or not, the number is going to be a minus number versus last year of about 100,000. So what happened with the wheat market? It fell in unison with the corn market. I do think these wheat numbers, especially the acreage report, can be constructive going forward, but once again, it's going to be up to Mother Nature. Now, we've already seen the trade try to get friendly to wheat based on the dryness out in the central southern plains, but we have to remember, April is the big month for the developing winter wheat crop out in the central southern plains. So we're just going to have to wait and see how that plays out. But right now, if I had to guess, you know, which market could we bottom pick on, it would be the wheat market if the dryness in that area continues. Looking at the soybean market, quarterly stocks come in a little bit less than expected, about 13 million bushels less than expected. In the grand scheme of things, that's not a big deal, especially considering the amount of beans we have on hand. Looking at the acreage report for soybeans, the government reports 84.6 million acres. That's about 1.3 million less than what the trade was expecting, and versus last year, it's only up 900,000. Everybody has been bearish beans, not only from an old crop supply standpoint, but also from the idea that we would see a tremendous increase in acres. Well, we got neither one of those. So the bean market did manage to rally a little bit, but we have to remember, as far as old crop goes, that's more than enough beans to go around. So I'd be a little hesitant to chase the rally in beans. I think the biggest support that we had in beans today was from intermarket spreading. As I mentioned earlier, I think the trade was positioning for a friendly feed grain report, a bearish oilseed report, and they got just the opposite. So the best that can be said for soybeans is they'll hold current ground, but I'd be very suspect of a rally. Remember, we've got a big crop coming out of South America.